You are listening to the Innovating Cannabis Podcast, where you will meet entrepreneurs, cultivators, scientists, doctors, and inventors in the cannabis industry.
I'm your host, Pam Schmiel, a freelance writer and journalist covering the cannabis industry. Today we meet Ben Burstein, who's head of M&A and strategic partnerships at LeafLink, a leading wholesale cannabis commerce platform that connects brands and retailers by providing a digital marketplace where retailers can discover brands, place wholesale orders, and manage their inventory. We dive into the operational challenges of inventory management, who are the emerging market performers, wholesale sales trends, and which states are emerging as opportunities for brands to expand, as well as long-term growth projections for the market. Let's welcome Ben Burstein to the show.
Cool. Thank you so much, Pam. LeafLink is the commerce platform for the industry. Every week, we help more than 3,000 brands sell their product to over 7,000 dispensaries across the country. Our job is to make life for operators easier. We automate many painful manual tasks across metric and compliance transfers, wholesale sales, productivity and management tooling, the CRM. We're the largest sales channel in all of wholesale cannabis. More than $3 billion of product sales originated on our platform from retailers logging in and finding new products that they want to buy. Every single year, that's more than $1 million for every brand on the platform. We love working in the cannabis industry. We've done it for more than 10 years. And LeafLink really is the place for operators to ease many of the burdens that exist in the highly regulated, complex cannabis industry across the US. I'm Ben Burstein. I'm a part of our corporate development team here at LeafLink. My main roles are I help manage our mergers and acquisitions process, our strategic partnerships, and I lead a lot of our thought leadership. So we carry most of the products that are sold across the country. We work with almost all of the major operators, and we have a lot of data that we see through our platform. So it's part of my job to really understand what do those trends and flows mean, and how can we use that data to better help our customers.
Yeah, I wanted to get into your recently released 2025 industry trends report and kind of go through some of that. But I also just kind of wanted to dig in a little bit on the, what services you offer. Do you provide any sales support, and what other types of support do you do, like strategic support and things like that?
And thanks for asking. The benefit that we provide our operators is that we solve many of the complexities that exist in the US cannabis industry. Like, I'll give you an example. You're a brand. You want to sell one SKU, one product to your retail partner. In order to do that, just to sell one product that at an average unit price of about $10, you have to touch metric more than 13 times. You have to input those order details across 4 to 5 different systems. So that's your financial ERP, your operational ERP, your point of sale system, whatever you're using to manage your inventory, your compliance system, and others. And then you actually have to get that order delivered, transferred, and paid. That's really hard and a lot of work, right? So like for us, we view ourselves as the commerce platform. We centralize all order management for both sellers and buyers. So you no longer have to just text and call and email all of your different counterparties. It's all in one place. We streamline the way that sales teams are run. Their CRM, all of their live menu tools, all of their ordering tools are all directly within the platform. And we eliminate a lot of the manual data entry requirements. So for instance, we have one of the most, if not the best, metric integration in the entire industry. All of your different movement of product to different facilities and the push and pull of transfers is done automatically through the platform. So to us, it's all about providing the tooling that the industry needs. We think that additional sales are a key critical part of the industry. The wholesale industry today nationally is about $11 billion in sales. $3 billion of that comes directly from sales through our platform. So we empower brands to sell better. We help them sell more product. And ultimately, our job is to make the industry as healthy as possible. So that's like our core marketplace product. We also have a series of financial services and fintech products that we're really excited about. I worked for more than a year on the acquisition of Dama Financial. We're the largest business banking provider in the entire industry. We think that we have one of the best products out there, right? There's huge pain points that exist in financial services in the industry today. Business banking is extraordinarily expensive. The average operator is paying like $3,000 to $6,000 a month for a business bank account. We think that's absolutely ridiculous. Those costs are absurd. It's very difficult to manage your business when just your business bank account costs so much. So we have scaled agreements with bank partners, with cash couriers in order to pass through many of those savings to our customers. We're really excited about that. Financing has been a key critical part of the industry and it's not accessible. You have billions of dollars of financing needs for the industry every year that go unmet, and we've worked very hard to solve that through one of our financing partners. We offer a line of credit product at 2% a month. It's the cheapest interest rate in the entire industry, so we're really excited about that product. We also eliminate collections issues. Something that we've worked a lot on is trade credit insurance. We're the largest trade credit insured solution in the entire industry. We have millions and millions of dollars to guarantee payment that goes along our payment rails. So if you use our LeafLink payment on sell-through product, you're automatically given this trade credit insurance and you don't have to worry about bad debt. It eliminates that problem. So overall, for us, the goal is to combine both that ordering, procurement, and marketplace experience with the financial flows in the industry. And we think the opportunity we have to bring them together is extraordinarily powerful because all of a sudden, all of your different business banking and payment workflows are accessible directly where you order. If you're a purchasing manager at a retailer, you know exactly what you can buy and what your open to buy reporting is. If you're a seller, you understand the credit history and credit worthiness of many of your different partners. So that's really the mission of us as a platform is to centralize all commerce in the industry in one place because many of the different fragmented data systems, inventory management, financial systems do not talk to each other in the industry, and it creates huge pain points for operators that don't have a way to reconcile if the product actually sold, how much are they owed, how much do they owe their counterparties at different dates. Like it's really difficult to manage when you have 100 counterparties with different terms on all of them. We've automated all of that. So we think that we have the most powerful platform in all of cannabis, and I'm really passionate about the space, and I wouldn't be here unless I knew how strong the value proposition was for the operators we work with.
The Dharma Financial is a partnership that you've developed for banking, like so they could have a bank account, their business bank account there.
Yeah,
Um,
and we own the Dama platform. We acquired it last summer, so it's been about a year since we acquired that business. So our goal is to integrate it directly within the LeafLink marketplace. We're still working on that, but we're very dedicated in making sure that um, you have like direct visibility and overlap between what product movements mean, what financial movements mean, and actually reconciling that to the invoices, purchase orders, and metric transfers.
so you couldn't onboard another bank that they have and integrate it into your system if is that how it works now before you got this partnership?
Yeah, so we work with other business banking providers that are sponsor banks through our Dama Financial platform. We're happy to work with operators with whatever banking setup makes the most sense for them. We think that our business banking opportunity is the best of any in the industry. We think we're among the lowest cost. We have the highest feature value adds. We have the largest courier network. We can move cash essentially everywhere in the country. That is very difficult to do if you're a small scale, unscaled, state chartered bank. So we think that our large, robust network of partner banks has made a really compelling offering. We also work with people who have their own business bank account. We could connect that into our payments infrastructure and facilitate those payments across our rails. But we think the special sauce really exists in doing it through our integrated business banking payments and marketplace ecosystem.
Right. And when you are trying and you're working across state lines in this industry, transferring money like your business in, New York versus New Jersey, is that are those separate things that you have to have, or I guess separate bank accounts because it's a state by state, right? Is that how that works? I've never thought about this.
That's a great question. You can't commingle product across state lines, so you
Oh,
can't
that I
move
know. Yeah.
flower product across. You can move financial flows across. What most operators do is they have a different bank account for each of their states. So here's an interesting example. If you're a large multi-state operator, like we have customers who previously had 60, 70 bank accounts across different providers. So not only do you have many different bank accounts, you have many different banking providers. We think one of our very compelling value adds is we can work across all states. So we'll then take that provider who maybe has 40 plus banking relationships. They'll now have one banking relationship, and that banking relationship will all be held at the DOMA level. And then we can provide different accounts through different sponsor bank relationships and bank relationships that we think really help operators.
How is Dharma looking at loaning businesses money?
Yeah, so credit's a huge need in the industry, right? Like just among your top 30 MSOs that are publicly traded, there's $6 billion of refinancing needs. There's billions and billions of more along the remainder of the industry. So we think that as a banking platform, it is definitely our job to help source credit and help facilitate additional working capital needs and other financial products that we think can be very valuable for operators. We have a best-in-class financial partner where we source lines of credit and other term loans for a short amount of time that we can help them buy inventory, better allocate the way that their spend path works, and ultimately like make bigger purchases or whatever financing need an operator has. At the same time, we also have in-platform features that include credit and liquidity. So one example is our FlexPay product. You can buy terms directly within the platform. So if you want 30-day terms, we're willing to provide them for you. And for a small fee, we'll take that burden off of the brand partner. We also have our payment on sell-through product. It's a new innovative payment solution that is almost like consignment. We tap directly into metric, and as products are sold at the retail level, the brand will be paid. We think that's a spectacular product. And like I talked about earlier, we have trade credit insurance with that product. So as a brand, you can align your incentives very directly with the retailers where you're both encouraging product to sell through. As it does, the brand's paid, the retailer makes their margin. And if there's any challenges in that flow, we have insurance to ensure that the brand ends up getting paid.
Okay. Oh, that's fantastic. So it's a consignment deal, so the brand isn't going to wait for the retailer to make the decision to send them a check. You're already it's like when it happens, then you
Exactly. And that's what we think is so powerful about this like whole integrated interwoven infrastructure. Because when you have the business bank account tied to the commerce flow, tied to the data we
Yeah.
get from metric and other systems, we can do things like automate payment directly based on the sell-through.
And
Uh,
that's the contract. Like this, if
exactly.
you want to do this, this is how it's going to work. Okay.
Yeah, so and we have many different types of payment solutions. We have your standard like B2B ACH type rail. And all this is actually included at no additional cost in the LeafLink platform. It's something we're very proud of offering to the industry. We recognize how big the AR and bad debt problems have gotten in many legacy markets. And what we know from many other states is those problems aren't stopping anytime soon. Many of the markets that have been most challenged over the last couple of years, like a California, an Oklahoma, and Oregon, those challenges are coming to many of the markets who passed adult use a few years ago, have scaled up their production, and now starting to see some of the ramifications of a very large harvest. So states like Michigan, Pennsylvania, Arizona, where pricing has been very challenging, like collections issues are ramping up. And operators need to be ready for that. Your typical counterparty relationships are going to change over the next year. So we think many of the products that we offer are to protect from the margin challenges, pricing challenges, and ultimate like operator needs for better financial services tools. So we're really passionate about it. We care a lot about it. I work on it every single day. I think it's like a really big value proposition for the industry, and no one's really been able to do it at scale. So we feel like having so much of the volume in the industry on our platform, alongside the trust of so many operators, really positions us to be the best operator in the industry for these types of solutions.
Right, and then it's just kind of forcing the retailers to not take that money and use it somewhere else and figure out how to streamline their operations. I know it's all because of the slim margins. I mean, that's really the problem. So I know in your 2025 recent report, you were talking about inventory management is kind of what we're talking about, is the industry's weakest link. Too much inventory on hand. And I've heard kind of other people talk about it, but I'd like to kind of break that down a little bit too, because it's I think some of the problem also is like, oh, there's so many great new brands coming out and you want to give everybody all the, all the choices and, between the different formats and things like that. Like what's the smart way to approach inventory?
Thank you for asking about this, Pam, because it is by far the largest pain point in the industry today. Total industry sales are about $30 billion a year. More than $10 billion of cash flows are lost in the industry on a yearly basis because of the inventory mismanagement problem. The largest area of problem is operators overstocking product. The average retailer on LeafLink has about 100 to 120 days of inventory on their shelves at any time. Your average convenience store or smoke shop is like 20 to 30 days. So that's really expensive. You have a huge amount of working capital tied up on shelves, right? Your average dispensary is selling about $3 million a year. So all of those extra days of inventory means that you have working capital tied up there across all of our stores today. That's about $8 billion in additional capital requirements. That money doesn't exist in the industry, right? So the only way you can actually liquidate that inventory into cash is to discount it. And discounting is a major problem in the industry that we talk about a lot. The average product sold on LeafLink at retail comes with a 13% discount on $30 billion of sales. That's $4 or $5 billion in profit directly lost due to the overstocking needs. And that's not even including all of the different working capital and cost of capital requirements that come from those inventory mismanagement. The other area is stockouts. Individual purchasers matter a lot in a dispensary. 1% of baskets drive more than 20% of total sales. So said another way, people who smoke every single day or use product every day, it's about 15% of total purchasers that go into a store on an average basis, is more than 90% of sales. So your heavy consumers drive the vast, vast, vast portion of your revenue. If you don't have the products that your heavy consumers want, they're going to find them somewhere else, and that causes large amounts of large sales or stockouts. So we've done case studies with many of our retail partners, and we've learned on average about 6% of all sales are lost due to stockouts. On a $30 billion industry, that's another 2 billion plus of total losses. Those same dynamics, severe overstocking causing liquidation and discounting, or understocking of the products that move the fastest and consumers really want to buy, also happens at retail, right? Like those same effects of supply and demand impact further up in the supply chain, and it causes losses in profitability and cash flow from brand partners. So overall, across this inventory management problem, we see about $6 billion of lost cash flow on an annual basis to retailers, about $3 billion in lost cash flow to brands. We think it's such a huge addressable problem because it's solvable. We've come out with an inventory management product that, based on the sell-through of the products you have today in your point of sale data, we integrate with many of the major point of sale systems. We'll tell you, this is how much of each one of these products we think you should stock. If you build your assortment in this way, this is your expected margin velocity. Here's the improvement to your day sales inventory. And we think that's a very powerful product and solution. There's other in the industry doing it too, like Happy Cabbage or Prelude, who've been able to scale their number of stores pretty well. But you're still at a place where under 10% of stores in the industry are using like data or a technology system to manage their purchasing. Most stores in the industry, you have a bud tender or a purchasing manager who will walk around the store, look at which shelves are empty or not, and decide to buy more or less of a product We don't think that's the proper way to buy. You have all of your data on LeafLink in terms of wholesale purchasing and then the sell through at retail. So really fixing that problem is the core solution to profitability challenges in the industry. At LeafLink, we do a ton of underwriting for all of our credit products. And in the last year of about 600 operators that we were able to underwrite, a very small portion of those were actually generating profit on an annual basis. Most of those were because of their inventory mismanagement challenges. Their gross margins were very low. If you're able to right size those to the average in the industry, we think 30, 40+% of retailers across the entire country would be profitable. Like, this is the biggest problem to solve overnight. It's a bigger impact than rescheduling, descheduling, the removal of 280E. Like, all of those combined are less than what can be solved through better inventory management in the industry. I know it's become more and more of a prescient topic across discussions for very good reason. Like, it's really important to get inventory management right. And part of the key solution there is having the data and analytics available to do that, because today there's not many providers that have access to all of your different data flows that you need to really know, what should I buy, how much of it should I buy, at what price should I buy it, and at what price should I sell it.
I see the big opportunity here for increasing your margins aside from like a 280E or things like that. We've got to look at everything as operators. So is there anything else out there, or other data? If not, what other data is missing that could really just even improve more?
Thanks for asking. These are great questions. It's the same exact ideas that we think about at LeafLink every day. We don't think that the industry has a good perspective on the movement of product across the different nodes in the supply chain. So a wholesaler doesn't know when their product's sold through a retailer. A retailer doesn't know what production is coming further up the supply chain. And ultimately, the entire supply chain doesn't really know what end consumers are looking to buy in an industry where, as a brand, your job is to sell your product to end consumers. Not having the see-through into those movements of product and sales and dynamics at each of the stores, we think is a big missing link. So we focused a lot on how we can better use data analytics across all of the different platforms that we integrate with, pull in data from, and work with in order to better equip retailers, especially with purchasing needs, but also brands with the data that they need to better manage their production and forecasting production. So on the analytics and inventory management system, we feel very happy about some of the companies that we talk to, like the inventory management solutions. Happy Cabbage and Prelude do a great job as solutions to help build and manage assortments. Some of the analytic providers in the industry, like Headset, BDSA, Hoodie, do a really good job of both taking primary internal data and some web scraping data to better equip brand sales teams with the data they need in order to go to market. So overall, we think that we are the like all-in-one platform in order to do it. We are the only ones in the industry that have the full assortment of wholesale, retail data, and all the flows that go between those in the supply chain. But we do think that some of the other analytics are very valuable in the space, and are very important for many operators to work with. We partner with many of these operators because of their criticality to the industry. And we think that building adoption of data products is very important and is very underserved in the industry. We estimate that across all of the retailers in the industry, only about 600 are actually using these data analytics providers and solutions. The MSOs have their own individual teams, but that means in an industry of about 11,000 stores, only like 2,500 to 3,000 are using data well, successfully, and are even trying. So most of the industry today does not use data analytics as a key input to the day-to-day decision making, like any traditional industry does. And we think bringing in more information so that operators can make better decisions is like a place that's very important for us to provide and resource.
So you were saying that the heavy smokers, heavy users are like what, the 1% or something, that the biggest basket size. Are there specific, I would assume it's flour, or that would be the main format that that group is buying. Is that true, do you think?
Yeah, it is true. We've done a lot of work with partners to better understand purchasing behaviors among end consumers. So your very heavy purchasers on average buy significantly more low-cost value flower than anyone. Your heavy consumers care the most about buying the lowest cost flower with the highest dollar per THC content. That's one way to buy, right? At the same time, you also have many heavy consumers that have been conditioned to purchase with discounts. Most of the heavy consumers in large basket sizes almost always accompany a discount or promotion. Many in the industry have conditioned customers to buy with discounts, right? Like you have stores in a state like Florida today where you have price compression dynamics and oversupply. Like most people in the Florida medical market are not going to buy product from a dispensary unless there's 30, 40, 50% discounts on the baskets. And the operators are willing to offer it. They're selling their own vertically integrated product. They have good margins on it. They're willing to create an environment with those discounts that are still profitable. But at the same time now, if you're a consumer, you're not going to buy without a discount. So we really need to figure out those end consumer purchasing behaviors. We think that's a major problem still in the industry. If you're a consumer, you don't really know what to buy. You typically go on the guidance of a bud tender or other like in-store promotions. But the major challenge exists in the brand being unable to connect directly with the end consumer. The brand doesn't know who's purchasing their product because that data is held at retail. They don't have the ability to target advertisements to people who might buy their product. You can't advertise on the many major social media sites. It's very difficult to get attribution data in order to advertise directly to those end consumers. So because of those challenges in brand building in this space, it's become very difficult for operators to build pricing power, especially among your heavy purchasers. So like the top 1% purchasers are looking for low cost products that they believe are good. And typically that's just a high THC content. The remaining purchasers are much more differentiated across your various different products. It's also very different on a state by state basis. So for example, here in New York, pre-rolls are about 25% of sales. The highest they are in any other state is about 15%. So like the success of that format and product category in New York has been very interesting to follow. It's uniquely successful versus other markets. And it gives us a lot of lessons for the impacts that certain product formats can have on other markets. Ohio's a very successful adult use market that launched this past summer. So we've had about a year of sales. They more than doubled sales as a medical market to adult use market. At the same time, that's a state that doesn't have any pre-rolls. So you see a state like New York, who's been so successful growing sales with more than 25% of the 150 million plus a month coming from pre-rolls. At the same time, you have a state like Ohio who's been really successful without pre-rolls. So like what does it mean when Ohio regulators are interested in evaluating pre-rolls as a new format category? Probably going to add 10 to $15 million of sales a month to that Ohio market. That's a great story for the many operators. We see other states like a Maryland where purchasers are typically skewed more to like the old medical market. So you don't have as much value flower. You have many more processed products. You have a lot more oil sales than you do flower on average in most markets. You have very high edible concentrations because those are typically purchased by your more medical consumers. So we love seeing all the different state by state dynamics and better understanding what that means for national trends. But overall, heavy consumers buy a lot of cheap product, and the remainder are looking for like best in class experiences or very low THC.
Yeah, I guess it makes sense that they're trying to buy discounted products because they're buying so much. They need to, yeah, figure that out. But also, I just feel like as a retailer, to be able to focus on what are they really looking for and really, if that's really most of their sales, like what is the product out there? Bulk sales. I mean, I would think that's pretty big. Where's the flower that everybody wants? Who's the farm that that they're going to all buy from?
And that's why we love the LeafLink platform. We have all of the brands directly in the marketplace for purchasing managers to source. We give different tags and badges based on the success of those brands. Brands are able to advertise directly to their dispensary partners on the platform. There's no other place for a brand to advertise to the dispensaries that want to buy their product. So
Mm.
we think that overall, it's just about building this flywheel and ecosystem for the industry to help support many of these challenges that exist because we're a core seller platform. Like we have built the platform to help sellers move their product to retailers. We also view it as part of our problem statement to help those operators sell their product to the end consumers because that's what makes the entire industry healthier.
So what kind of tips would you give a brand as far as, I don't know if this is in your wheelhouse, but tips you would give a brand to prepare its sales team for success? I'm sure you've seen brands make mistakes and, some have very successful. I'm sure you've looked at why are they successful? What can you kind of say in that area?
Yeah, it's a good question. As a sales team, it's your job to help the purchasing manager of the retailers you're working with understand your brand's unique value prop. Um, the average store in a state like New York carries about 600 SKUs. If 25% of your sales are pre-rolls, you'll typically have about 100 to 150 pre-roll SKUs, let's say. How do you differentiate your brand in a pre-roll format? So that a retailer is looking to purchase it. And I think there's like a few key ideas. It's understanding the customer purchasing. Why do you, as a brand, present a unique value prop to the retailer's customers, and why will you grow their retailer sales? The second is product performance. Why will your brand or product enhance the total margin velocity for SKUs sold by that store? You have to help them identify products that they can be sold together with, different promotions or other discounting behaviors, because that's how the consumer is conditioned to buy. So, how do you help them enhance the profitability overall of all their units? And the last is like market and seasonal trends. We're coming towards the end of the summer now. The summer is your best sales period for pre-rolls across the country. This is like a really good time to be selling pre-rolls, right? If you're around 420, flower is by far the best selling product. You want to sell flower. If like we just passed Oil Day, July 10th. If you're a concentrate brand, you sold to every single retail partner you could have. Purchasing of concentrates was up about 50 to 60% versus the average weeks on LeafLink. So we saw this huge increase in demand for certain formats and product categories. So I think considering all those different ideas, what does the customer want to buy and how can you show the retailer why you're going to help them sell more? How do you improve overall product performance, enhance margin velocity, and improve the profitability of your retail partners? And how do you map onto the market and seasonal trends in the industry so that retailers are coming to a time of purchasing certain products or trying to stock more in certain areas and being able to combine there?
Have you seen any form factors or that are emerging? Like there's a lot of the powder packs that you just put into a drink. Because I know I'm also based in New York, and like last year when I went to a few of the trade shows, I felt like every brand in New York had those powder packs, one, single size in their lineup. But then I didn't really see them at the last trade show, so I'm thinking they're not doing that well.
On LeafLink, the top 10 best-selling SKUs are all infused pre-rolls. Many of them are like the Baby Jeter products that you see sold, but even some of the infused products now from like dog walkers and some of the other major pre-roll brands have emerged into the top 10 SKUs on LeafLink. So we see huge demand from retailers there. Couple of years ago, the top 10 SKUs were flour. So seeing like that change from like just general flour products to a more processed format shows one, like an intent from purchasers that they're more interested in like a pre-roll category than many would have expected. The rise of New York has definitely contributed to the growth there. Pre-rolls are doing very well right now, especially on the infused side. So that's like the product category I would look towards most as the biggest change. Outside of that, as more markets transition to adult use from like their medical roots, you'll see less of like your typical medical products that have been sold. Like you've already seen the phase out of like certain balms and tinctures and low THC products that have been a lot more popular in medical markets. Those just aren't sold as well in the adult use markets, but we support them on LeafLink. Like we have companies who sell like suppositories for cannabis or like very neat like patches with THC, very niche use cases. and they do very well. And we think that like the platform has been able to help them by better positioning brands that many retailers wouldn't typically see in a more accessible way.
So you don't have any hemp-based products on your platform?
No, we don't sell hemp-based products on the platform, only regulated, but we can talk about beverages because there's been a big increase in sales on the platform. I think part of that is accompanying the wider hemp THC trend. Like hemp THC is a 5 billion plus a year business today. That's about the same sales as like cartridges or other concentrates. So it's become a very big form factor. It's sold in very traditional venues that people purchase in Total Wine, in Specs, in your liquor stores, in your convenience stores, even in grocery stores in some places. So people are becoming very comfortable purchasing those products. Total Wine has said that more than 30% of purchasers of their THC beverages have never tried a THC product ever. Like, think about the implications there, right? Like, they're selling hundreds of millions of dollars of product, and 30% of that is going to entirely net new consumers. So, the beverage category has been very successful at bringing new consumers into the market. I actually think that hemp THC beverages are very strong for the regulated market. You get more people comfortable with purchasing product and trying it. As everyone knows, there is no difference between hemp THC and regulated THC. It's literally the exact same plants. So most consumers recognize that and they're willing to buy more product from the regulated market with new entrants. I think that's helped beverage categories overall. A year ago, we were sitting here and beverages were 1% of total sales on LeafLink. Now today we're sitting here, it's about 3% of total sales. So total sales have basically tripled from where they were last year. A lot of that has to do with this hemp THC category and the emergence of beverages. Like if you go into the average dispensary, they typically would have a fridge, but most fridges were stocked with like concentrate products. Today, that's not the case. Most fridges have beverages in them, and it's because consumers are demanding them because they see them at the liquor store. They're very happy to go and purchase them in a dispensary. They're willing to pay the price increase to do it because it's tested, regulated product that they know they can trust more than just like a hemp THC brand that's out there. So I feel very good about the beverage category going forward. I think that's going to continue to be an important piece of the industry, especially if it becomes the new way to consume. There's states that are actually making it very easy for the regulated market to expand past that typical dispensary channel. The example I love to talk about is New Jersey. Regulators have been trying to find a way to place regulated product and in particular regulated beverages in liquor stores. The impact and unlock that has on the industry is huge. You have about 200.
I didn't know
Oh,
that.
yeah, you haven't seen it? Yeah. New Jersey, they want to be able to sell regulated product in the liquor stores. I think it's a spectacular idea.
Wow, that would be
Yeah.
amazing.
I mean, right? You have 250 dispensaries. You have 7,000 liquor stores in New Jersey. It significantly enhances the accessibility to the plant. So we'll see if regulators are able to do it. But even an interest in being able to do that is huge, right? You have 11,000 dispensaries nationally. You have 2.3 million locations where you can buy alcohol. Being able to bring the accessibility to cannabis to the levels of many other like vices, especially like an alcohol or tobacco, is how you get industry of U.S. cannabis to like the $80 billion annually that U.S. tobacco is doing, the 250 billion plus that U.S. alcohol is doing. I mean, there's a lot of use cases for cannabis and a lot of benefit. And really, the prohibitor on sales today has been limited accessibility. There's just not enough places for.
Oh, yeah. I think I just heard today somewhere that what is it, top 10 liquors or whatever that liquor store chain is in Minnesota, that 25% of sales are THC. Oh no, 25% of their footprint in their store is dedicated to THC drinks. That's what I just heard somewhere. And I thought 25%, that's amazing. So other states, once they start seeing things like this, or if New Jersey adopts that law, allowing them in liquor stores, that'll just make other states go, oh, great, we can just increase our tax revenue from here to here. So it little by little, I guess we'll get to those
Yeah, and that's how you take out the illegal market, right? Like you have
Yeah.
$100 billion of total sales nationally, 30 billion of that's legal, 70 billion of that is illegal. The main reason for illegal sales is lack of accessibility. As you bring formats into places that people buy, they are going to buy from the legal market. Like you've seen it across many of the states that have legalized. A state like Colorado that did a spectacular job of building out retail density, basically stamped out the illicit market. A state like California, who has the two-tier approval process, so you need to be approved by both the county level and the state level, has more than two-thirds of municipalities in the state without a single cannabis business. It's one of the reasons why total sales are much lower than many would expect based on the population, with much higher illicit sales. Like, what happens when large population centers like North Carolina, Texas, and Florida get access to adult use product? And the answer is that those are going to be some of the biggest markets in the country. It's
Well,
just a matter of time. So it'll be interesting to see how the regulations fall. But I do feel very confident in the ability long term for cannabis to start to cannibalize much of this illicit sales because people want to buy regulated, tested, trustworthy product. And it's just about the story of getting there.
yeah, I agree. In the end, I think everybody's going to want, that's going to be the key once they understand and that how easy it is just to walk into a store and multiple stores and convenience stores or whatever, instead of trying to connect with your, your dealer and, do that whole thing. So, but I didn't realize that North Carolina was like a big state. Of course, Florida, especially with tourism, and of course, Texas, but I didn't realize North Carolina is such a big state.
Yeah, I think they have the sixth or seventh largest population in the US.
Oh,
So no, but everything's tied to population. All consumption is tied to population, legal, illegal. It's all about where people live. So being able to get stores where you have the most people is really important. And you're seeing it, right? Like New York has been by far the fastest growing market in the world over the last year. They've added about $1 billion in total sales from the beginning of last year to today. That's going to continue to grow as more stores come online, especially in New York City. You have about 400 stores across the state. Regulators are guiding to 600 by the end of the year, 1,500 long term. Like the implications on sales are huge. I think if you get to like the 600, 800 store level, New York will be the largest cannabis market in the US,
but
especially
the
depending on pricing dynamics.
and also with all the tourism, we have what, like 68 about million people a year or something crazy like that, visiting the city. So just going back again to maybe some emerging trends that might be coming up, like the infused pre-rolls. I started seeing, I don't know if it's just one brand or a couple brands, but infused ground flour. So if you get a bag of ground flour, now, what, maybe an eighth or whatever, or half an ounce or whatever, it's infused. So maybe they're playing on that trend. I don't know if that's something coming up, but I'm just wondering, like, if you see something maybe kind of appearing out on the West Coast there, or are those powder packs, are they doing well? Or another one I saw coming up were the shots for the drinks. Like those things that you think might kind of bubble to the top eventually, or
Yeah, these are great questions. A lot of it depends on regulations across state markets. Many states have restrictions on certain packaging. They have certain requirements in terms of like percent THC content of the total package size, and the actual formats that are allowable. I have seen a lot of data on the LeafLink platform of the success of powders. Some of like our favorite largest customers, like a Ripple, has come out very successfully with their new powder products, like Ripped. So as we see more customers come out with different form factors and ways of consuming, we think that those product categories can grow. Infused flowers, similarly to infused pre-rolls, have been a way that people have gotten higher potency out of their products. We know that's a key purchasing decision maker, for many of the high purchasing end consumers. So being able to place the right formats and brands in the hands of the retail, in the hands of the consumers is what we believe is the true challenge. And requirement of the retailer. The brand's responsibility is really to get that product to the retailer and at the same time build that brand larger with their end consumers. It's very difficult to do that in cannabis today, but we think that's how the industry is going to develop over time. Your brands is your typical CPG scaled, consolidated players, your retailers as more fragmented, hopefully licensed with more accessibility going forward. And hopefully there's the opportunity to sell outside of the distribution channel of dispensaries because as you get closer to more distribution, you'll get more sales.
And do you have any recommendations as far as how many SKUs a brand should have? Is there, it's like, should they go for all those different formats or should they stay with a few? What do you say about that?
Oh, SKU rationalization has been the name of the game for the last couple of years. Everyone has to decrease the number of SKUs they have. You want to give good optionality to your customers, but the more SKUs you have, the more it's going to cost you. It's very expensive to manage highly diverse inventory. The amount of SKUs per store changes a lot on a per state basis. So like Florida, for example, where it's all vertically integrated product, it's only the product that's manufactured by the retail owner themselves, has about 300 SKUs on average. On the other end of the scale, you have Washington State. Almost none of the retailers are integrated with brands. They don't have high verticality. The average store has more than 3,000 SKUs. Throughout states, it's between that 300 and 3,000. The average store nationally has about 800 or 900 SKUs on their shelves and about 100 brands in that. So that means that the average brand in an average store is getting like 5, 6, 7 different SKUs to their name. So you want those SKUs to be your highest margin, best selling, most profitable products you could possibly sell because there's just not enough shelf space for your brand. If you're like the Kivas, the Wilds, the Wanas, the major brands in the world, right? You can start to go into some of these different product extensions, and you'll be able to rely on your brand power to enhance pricing power. But there's a reason why there hasn't been a very successful large-scaled brand who's been able to sell many different form factors and product lines outside of their own store channel. So if you're not a vertical brand, you want a niche and get very specific on what you're good at. If you have your own vertical store, sure, you should build out your portfolio of products across the different value tiers. But that's very expensive to do too.
Right, that makes sense. Okay. And then I guess the last question is, which states do you see as the best growth opportunity for brands thinking to expand to other states? I mean, we've kind of talked about some, large populated states and things like that, but where do you see a good opportunity for a brand who's sitting there contemplating their next move?
6 states are going to drive more than 75% of total sales growth over the next 2 to 3 years, more than 90% of the total retail license growth. That's New York, New Jersey, Ohio, Maryland, Illinois, and Minnesota. Those are your fastest growing states. They're accounting for the vast majority of sales that are coming up, and mostly it has to do with new licenses, right? Like New York has talked about plans to issue 1,500 licenses, about 700 new upstream licenses. New Jersey wants to have 800 plus retailers active. They've already conditionally improved many of those licenses. They're planning for more than 900 new upstream licenses. In Ohio, you're going to get a total of about 310 stores in the state. Today, it's about 120. You have 40 new grower processors also being issued licenses with retail. In Maryland, you have 900 social equity licenses that are in the process of being issued. 300 are retail, 200 are delivery-only retail licenses. In Illinois, you have all your social equity licenses that have been issued over the last 2 years. They've had some challenges coming on because of lack of access to capital. But over time, like the sentiment is that either capital will be found at the state level through state level grants and loans, or it's going to be found through larger operators looking to enter that state. In Minnesota, they just started the licensing process this summer. They're going to issue one store license for every 12,500 people in the state, so that means over 500 stores. So total nationally is about 11,000 dispensaries. Getting rid of Oklahoma, you have about 8,000. You have 5,000 new dispensaries coming online in just those 6 states. So those are by far the states I'm most excited about.
Great. Unless you have anything else to say, I feel like that was really chock full of information.
No, this is great. Thank you so much, man. I really appreciate you having me on. I have a lot of respect for everything you do. industry. And I really appreciate the time a lot.